Would you laugh if I said the US dollar is strong right now? Of course, it can't buy much more of anything these days, except other major currencies. In the past year, the euro has fallen 14% against the dollar, the British pound is down 13%, and the Japanese yen is down 20%. Every major economy has been devaluing their currency by printing money, but analysts like Jonsson of Santiago Capital have long predicted that the US dollar would be the last fiat currency standing. The dollar is the world's reserve currency. That means most international transactions are done with dollars, even transactions not even involving the United States. For example, around 80% of the world's oil deals are done in dollars. Johnson also says there's more dollar-denominated debt outside the United States than there is inside. So to pay all that back, people will need dollars for a long time to come. That keeps the demand and price of dollars high while it pushes down the value of other major currencies. But dollar strength may come with problems. It worsens inflation outside the United States because those countries' currencies are weaker now, making imports more expensive. That leads to less investment, slower economic investment globally. And during times of economic weakness or uncertainty, where do investors put their money? In US dollars or US assets, further strengthening the dollar and weakening global currencies. Bloomberg News today called this a doom loop, and with us to discuss if it is a doom loop is Lance Roberts, Chief Investment Strategist with RIA Advisors. Lance, great to see you.
Always glad to be here. Thank you.
Lance, I think you're the perfect guy to ask. You're just back from vacation in Italy. Were the Europeans happy to get your dollars?
No, not at all. Actually, it was kind of interesting that, while I was there, nobody wanted to take dollars. They wanted it in euros. And, I tried to explain to them that, the dollar was strengthening and they'd be better off taking dollars. But yeah, they just didn't want to. But, your point here is that, a stronger dollar is inflationary for them because everything that they buy is costing them more money now because of that exchange rate between what they're buying in terms of imports and what they're paying for them.
And do you feel this is a global risk, even for us here in the States?
Well, now remember, when we take a look at corporate profits and talking about, here in the States as well, about 40% of our profitability for corporation comes from exports. So as we're exporting to other countries, that means that, the cost of those exports for other countries are going up. So they potentially purchase less, right? So that hurts corporate revenues. So a strong dollar isn't always, a panacea for a country. It can have some negative knockoff effects, and particularly in a weaker economic environment like we're seeing now, those exports become very important in terms of keeping economic growth here strong.
Because in the past, we hear, especially the United States, complaining about other countries devaluing their currencies to help their exports, like you're saying. What is the solution for the United States, considering the inflation problem here?
Well, this is, and look, it's always important. And I've had problems with previous administrations talking about, the devaluing of currencies. Look, we've been manipulating our currency since 1900. So everybody does it. And the reason that we do it is to keep trade balanced. Again, imports and exports are very important for economic growth. So if our dollar gets too strong relative to other currencies, right, then we export less. If it gets too weak, well, that causes problems for other people. So what happens is over time is that countries try to balance their currency to some level that's beneficial to both parties. So it's not some nefarious scheme, to try to make one country stronger than another. It's simply just trying to keep the balance of trade at equitable levels. And, right now, because of what's happening here in the States, we're getting a lot of flow of dollars into the U.S. to buy U.S. treasuries, to buy our U.S. currency, because it is getting stronger. And unfortunately, the stronger the dollar gets, the more value it attracts, because if I've got reserve currency sitting in another country where it's getting weaker, I want to move those currencies to somewhere where I'm not losing purchasing power. So, it's kind of a self-fulfilling prophecy here. It will eventually rectify itself, but this is part of the cycle that we're in right now.